Hello everyone, Simon's here with AvaTrade. Welcome to our weekly trading plan webinar. And as you realized, I didn't greet everyone with happy Sunday because unfortunately it's not a very happy Sunday, especially for the people of Ukraine. I'm sure most of you are aware what's happening there, and it is very upsetting. In the past few days, I've been talking to my friends that are currently there. I just spoke with someone today, and he's preparing. He's actually holding the Kalashnikov in his hand, and he lives in Kiev. And a lot of civilians there actually were given guns and ammunition so they can protect the city. And I'm not gonna go into politics and everything, but it is very painful. But I'm very happy to see that people of the world are showing their support, and I hope that with the effort of everyone, uh, we'll be seeing and hearing better news. And I really hope to greet everybody next week with Happy Sunday. Before we go any further, I'd like to read the risk warning as usual. Any capital markets and trading information disclosed in this webinar is provided for informative purposes only and should not be construed or applied as investment advice, recommendation, or suggestion. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 71% of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. So again, for those of you that are new to this webinar, I just want to say a few words, and pretty much the title says it all. Uh, we're trying to make a plan for the week, just to create a little bit of a structure to organize our possible actions and to see what's happening. So we'll be talking about big picture, what's happening. We'll be looking at economic calendar, and today we'll start with commodities, then move to indices and some stocks, and try to make a little bit of a plan for the week. Now, this is the information how you can follow us at Twitter, and of course, YouTube is a great source of very useful information. The webinars, including this one, are being recorded there, and there's a lot of tutorials, a lot of information you can find and use. So let's talk about big picture, and it's interesting how because of Ukraine, there's not much COVID talks lately, and the situation is improving. U.S. is lifting some restrictions. Other countries are doing the same. There's less sick people, thank God. There are less heavy cases and less mortality. So this is a good thing. And on the 24th, unfortunately, the war was started, even though Putin prohibited the Russians to use that war or invasion or war or anything, not such war. So it's interesting. Again, I said I'm not going to go into politics, but I can't resist, because if you do watch Russian television, all the Russians are being brainwashed, being told that it's a special operation, nothing to do with civilians, and just total nonsense. And the whole world, it's not just Ukrainians, the whole world. I was watching today reports from everywhere, including the Indian television and French television and everything else, besides speaking with my friends there who are actually there. And you don't need to be smart to understand that it's an open war, and it's invasion of a country, and it's just unbelievable. I still can't register in my brain. Anyway, so there's a lot of things are happening. a lot of sanctions are being imposed on Russia, also personally on Putin and Lavrov and others there. And I think we're going to have a week full of volatility and unpredictable things, because the war continues and the attack on the major cities is continuing, including the capital of Moscow, Kiev. They have martial law, and today and every day pretty much it's being imposed. So from the evening till the morning, people can't leave, and a lot of them are spending nights in a subway, feeling more safe there. So with all these sanctions, we're going to have a lot of issues showing up on both sides. Russia is feeling, or Putin is feeling threatened, and he threatens to impose sanctions on Europe and on the States, whatever that means. So it's a lot of economical impact on both sides. They are pushing to take away the access to SWIFT from Russia. Some European countries are kind of opposing it for now, but slowly agreeing with it. So they're trying to cut Russia through a lot of things, including the airplanes. A lot of European countries are closing the skies for the Russian airplanes. Russia is doing the same for some European countries. So that's pretty much on the radar. And of course, we have in about 2 weeks, a little bit over 2 weeks, we'll have the first interest rate decision from US. And I just want to read something that I found, and I'm going to quote. It's something that Chris Zaccarelli said. He's the Chief Investment Officer for Independent Advisor Alliance. So I'm going to quote. He said that investors are likely going to be fixated on the inflation battle as they watch for remarks from Biden and Powell. Going forward, markets are going to find that the Fed's battle against inflation in terms of raising interest rates and reducing the size of the balance sheet is going to be a much bigger threat to investors than the war between Russia and Ukraine, he said. Zaccarelli said that the more it looks as if the Fed's hands are tied, they're forced to tighten monetary policy to fight inflation, the more volatility we're likely to see over the course of this year. And it says right after that, it is worth noting that Biden's speech comes as his approval rating is around its low of 40%, and his disapproval rating is near its high, as average American feels distinct of high price of goods and services. So about the speeches, end of quote, by the way. About the speeches, so Biden, they said, is going to be the most important speech so far, or historical speech of his in front of the State of Union, and that's going to be on Tuesday. So he's going to be talking about a lot of things. And his last speech on Russia, Ukraine, he said that he will make sure to take care of the high prices, especially in the oil and so on, the energy. And we have another speech, which is very important. We have testimony of Powell in front of Congress on monetary policy this week, and that's going to be 2 days in a row on Wednesday and Thursday. So we have a full week of a lot of important events. So this is the economic calendar. Again, to remind you, it's good if you look up your own events on economic calendar. It depends what you trade, what country you're focusing on, what industry, and so on. What I do here, I just take out a general high impact events for the week. So we have retail sales from Australia and GDP numbers from Switzerland on Monday. Tuesday, we have PMI from China. We have interest rate decision from Australia. Just to remind you, last one from New Zealand, they increased 25 base the interest rate, and that was expected. So here, as far as the expectation, they don't expect the increase, and let's see what happens there. So that's as far as Australian dollar. We have retail sales from Germany and CPI numbers from Germany. We have GDP numbers from Canada and manufacturing PMI from US. That's Tuesday. And just not to forget that Biden is speaking on this day. Very important speech, if not the most important. Wednesday, we have GDP numbers from Australia. We have employment ADP report on employment from the States. We have the first day of Mr. Powell or Chair Powell testifying in front of the Congress. We have interest rate decision from Canada. As you can see, they expected the increase by 0.25, and that is kind of a priced in or expected. Let's see what the outcome will be. And the statement comes right after that. We have on Thursday, we have Powell's second day of speech, and the governor of Bank of Canada speaking. And we have retail sales from Europe, and of course, the culmination of the week is going to be Friday NFP report. Okay, just for those of you that are not familiar with the report, it's considered to be the most important announcement, and it's usually first Friday of the month, and that's a report on how many jobs were added, and it comes together with unemployment rate and other employment related numbers. So that is on Friday. So this is what's happening this week. So again, check your own economic calendar, mark it up for yourself, be ready for that. And again, the most important thing, not the most, but the very important thing of the week is the Biden's speech and testimony of Powell. So on this note, let's move to the platform, and then we'll go through certain instruments and see what's been happening and what's the plan or what could be the possible outcome for the upcoming week. So we'll start with oil and natural gas. As we know, those are the most impacted by the situation in Russia, Ukraine. So if you take a look at crude oil on the 24th, that's where the war was starting. Oil went as high as 100.51. This is crude oil, right? So that's a level of 2014. You can't really see it on the weekly chart, but if you put a monthly chart, this is where we went to. We went to a territory of August of 2014. And that was a reaction of the market on the oil. And then we pulled in, and on Friday, we'll talk about in a moment all the markets. It was a pullback, pretty strong pullback, about 10% pullback from the highs to the 90, and then we closed the day 91.91, almost $92 per barrel. Natural gas, I'm very curious and a little bit confused with natural gas. It's a lot of threat that Russia will cut, or they're going to cut Russia from supplying natural gas to Europe. And just here, natural gas in January was at 550. And all this news, it's not really reacting to it. So it's not something that easy to understand. It looks like natural gas is having its own life, so to speak. So we did move higher on the beginning of the war, and then as the same as crude oil, we pulled in, and Friday we sold out a little bit, and we are holding this level around 445, 446. The low on Friday on natural gas was 441, and the close was 448. So let's see what this week will bring for natural gas. Now gold had a crazy move on this war situation. I'm just going to bring one hour chart and just show you how things reacted. So Gold was trying to break out of 900 or 1900, I'm sorry. And here it had the resistance around 1909. And then right here, when the announcement came, Putin actually announced that war around 5 a.m. Moscow time or 6 a.m. Moscow time. And this is where the gold started jumping, and it went as high as 1974. And then it just went down strongly and heavily and very quick. And it stopped right. It went as low as 1878. So from the high, it almost made a $100 move to the downside, and it ended up closing below the opening price a little bit. And then Friday was sold out again. So it's hard to say what's going to happen. The things are escalating there. If you follow the news, it looks like more tanks are coming in, and the Ukrainian people are really preparing to defend the country and the cities. So unfortunately, it might get really, really bad. And I really hope that with all this pressure and in the international pressure that we're seeing, things will happen in a positive way. So that's gold. If you take a look, like I said last week, the soft commodities are very sensitive to what's happening, and the same thing, they went super high on the day of the announcement of the war. This is the soybeans, of course, corn and wheat made very, very strong move to the upside, and the same thing, they pulled back a little bit, and on Friday was a big sell-off on the soft commodities. So what's next after this big sell-off? We might see again, if things are not getting any better, we might see some kind of support being built somewhere, and maybe continuation to the upside. It's very hard to say because this advance move to the upside also was very strong and rapid, but the retracement was much stronger. Take a look. In one move on Friday, we pretty much crossed out the previous 3 days of a move up. This is the corn. Wheat, the same thing, about 2 days of advance move was erased in 1 day. And soybeans, 3 days were erased. So again, it's hard to predict what's happening over the weekend and how market will open on Monday or Sunday night, depends where you are. And it's very hard to predict. So the whole move on the market will be probably seen on Monday. Depends on what's happening over the weekend and the situation with the war and the situation with all the sanctions and the response and threat of Putin, who actually start threatening other countries. That includes Finland and Sweden, because those countries are kind of showed their desire to maybe being protected by NATO and so on. Again, let's try to stay clear of politics, but it's very very unpredictable, and it's hard to say what's going to be happening on Monday. I hope only good things. So these are the commodities, and again, we'll see what happens. Now, let's move to indices. It's pretty much similar picture, and we would take S&P 500. It was already selling off. We broke through the previous support, and on the day of the war, of the announcement of the war, S&P went as low as 4101. Okay, almost hit 4100, and then recovered towards. Let's take 1 hour chart just to see how things worked out. So this was similar to the gold upside move. This was the sell-off that happened at about the same time. We went lower, and then it was a recovery, and then Friday was a very strong day as we established the support around 4250, and we closed on the highs. We closed on the highs, and now we really came to a very serious level on S&Ps. The way I look at it, this was pre kind of a war threat, and definitely not the actions. We came, the market sold, and we came to a level of 43.82 right here. And then we had a sell-off, then we came back. We failed to go higher. We had the double top around this level. I'm gonna draw the line here. We had a double top here, and then we went and broke through this level here. We closed within this level, but then on the announcement of the war, we went much lower, but then we closed. So we on Friday we closed on the highs and right into this number here. So again, the low here that was on January 21st, a month ago, before the threat of war or anything, we closed at 43.84 and a half, and now on Friday we closed $2 lower. So it could be that all this move stopped over here because there's a lot of selling pressure around this level. And if that's the case, and especially when situation is getting deteriorating, so we might see another move down. This time it could be to this level, 42.14, or it could be even lower than this initial move lower on depending of the war. So it's a very serious level here. And again, if you looked on Thursday, the dead cross, something that we discussed with you last week with the NASDAQ, the dead cross was already forming, but this move kind of fixed the chart. So that's the S&P. So if you take, I just remind you on NASDAQ, this is what we spoke about the previous week when the 50-day moving average crossed the 200, and a lot of analysts on Wall Street been talking about it as a very strong bearish signal when this dead cross is happening. But if you take a look at Dow Jones, actually the dead cross did happen, even that move on Friday didn't fix it. So it is a bearish sign here, and the similar situation, the Dow recovered on Friday and it came into this possible level of resistance, and the NASDAQ was the weakest one, and it didn't come to this pre-war level. It's around right here. So basically, if NASDAQ had done the same, it would have come to 14,412, and then it still shows the weakness here, as it is the weakest of 3 US indices. So that's as far as the US indices. Now, if you take a look at Nikkei is also at a very strategic level here. If you take a look, 1, 2, 3, a lot of actions here, and we stop around here at 26. What was the close? The close here was 26,910. Very strong move, but we are facing resistance here. And let's take a look at the European indices. The French index stopped right facing the 200 moving average. It broke through it, but it closed right on it. FTSE had a very strong recovery. Take a look on Friday. FTSE actually 1, 2, 3, 4, 5, about 5 days of move down. It crossed in one move on Friday. So FTSE is strong. It's actually above all three leverages again. I think it's the strongest of the indices as of now. DAX not even close to recovering to the previous level that we held, but it is a strong move on Friday. As we know, DAX is the German index, and Germany is really relying a lot on Russian gas, on natural gas, and they are having issues there with energy crisis, and maybe this is one of the reasons why the market is really weak. So again, Friday recovery across all the indices, and let's see how the Monday starts, how the week will be. it is a possibility that we'll have a hard time going any higher, and we're going to pull in again. Now, let's take a look at the stocks. The stocks, of course, did pretty much the same thing. We're going to go through the major stocks and see how they played out. So I'll start with Tesla. Tesla's been selling off, and one of the reasons were they had about 1.5 million cars being recalled for some issues there. And of course, the market sold. So, like I always say, even the best stocks in the bad market are being sucked in and being pulled lower. So, Tesla on Friday, it had to move, but it is below the 200 leverage there. If you take a look at Facebook, in the Facebook, we spoke about it at some point buyers are going to come in. It's been selling off, and Thursday gapped down, but it closed higher, and we about 200 psychological level, and here we about 205. So we closed at 210. Is it a temporary move higher? Will we go lower? We'll see, but at least now we have a little bit of a point of a reference. So this is the low of the previous sell-off, which was huge. We came from this price 326, and the earnings and the projection they make really caused the stock to fall, and the continuation happened. So the low here is 190.02. So at least if we pull in some people that are or traders or entities that are looking to buy the stock somewhere between the low and this level, at least they have a point of reference for a possible stop around 190, a little bit lower. So we established a temporary, or maybe it is a solid bottom before we go lower. So Facebook, it's very important that we established a little bit of a support here. Now, I spoke about AT&T, and I said on the market selling, AT&T really held this level right here, and it did fall on the news on the war, but it came right back and above it. So we are above this level that we kind of held around 23.5. So again, AT&T and Verizon are two stocks involved with the 5G business, and it could be that it was accumulation here, because take a look, we did hold as the market was falling through these days. AT&T held really strongly, and only on the announcement of the war and after on Wednesday closing below, it triggered the selling, but we recovered quickly, even higher than the support was. So AT&T could be on the radar for possible move higher should the market start recovering. If you take a look at Amazon, also Amazon sold out to the previous support in a way, and then recovered, and Friday went higher, but we're still below all the leverage. All the big stocks pretty much below the averages, and similar picture to the indices. Of course, it does make sense. Uber, take a look at the Uber. We said, I'm talking about Uber pretty much every week, as a while ago, CEO was very bullish on the future of the company, and we did so in the penny. We back to this 34.90, 35 level, and we need to close probably about 35.50 for it to start going higher, and let's see if that happens. So I'm not going to go through all the stocks. It's pretty much similar. Sell-off, recovery on Friday. Let's see again what the situation with war and what are the speeches and how they affect the Wall Street and the investors. Again, to remind you, Tuesday Biden speech, and Wednesday and Thursday testimony of Powell. So that's as far as the equity markets, and let's move to currencies, and we'll take a look at dollar. And again, if you remember, I've always been talking about 96 level on the dollar index, and we always play around that level. Over here on Wednesday, we did close above it, and then it was, of course, the big jump on the war announcement and the military actions. And then Friday, we sold out a little bit, but we are about 96 still, and 96.51 was the close. So, of course, if you see the dollar pulling in on Friday, that makes sense for the major currencies to get a little bit of a strength. So let's take a look what happens here. Euro had a move after the sell-off. Actually, this sell-off was very, very strong on Thursday with the war. We broke the previous support for a moment, and then we pulled in again, or pulled out of it actually. And then Friday with an update, but we didn't come above the previous day high. So the close was 112.70, below 113. Again, let's see how European news are going to be affecting euro. A lot of it to do with sanction and possible swift actions against Russia and so on. Pound tried to recover, not that much. It was a big drop on pound on that war announcement. Aussie dollar actually showed strength, so there is a possibility, judging by the chart, there is a possibility that on the announcement on Tuesday, even though it's not expected, but they might surprise everybody with the increase of the interest rate, because Friday was a strong day, and unlike other currencies that we just looked at, it closed above the previous day, so it is very strong. New Zealand dollar didn't do that, okay, and it did have its move on the increase the previous week. It was a strong move, and then we hit the ceiling of the 100 moving average. We pulled in, and now we are where we are. And again, to remind you, the correlation of Japanese yen, as I said, the Japanese yen is a safe haven. So when the markets are selling, the yen is happy to receive all the money. And this is the group of the currencies that to do with Japanese yen. And take a look on the fall of the market on Wednesday and Thursday. The currency pair moved down and then recovered on Friday as the market recovered. Similar idea on euro yen. Take a look. It had a tremendous drop on Thursday below the previous supports, and now a nice recovery on Friday. New Zealand, similar idea. Canadian, CAD-JPY, take a look how it just hit exactly the 200 moving average and recovered, and Friday higher. And pound yen also a nice move down, and Friday a little bit of recovery. So again, just to remind you, this could be an alternative if those of you that don't know how to trade indices or afraid to trade indices, of whatever reason you don't trade them and you stick to the currencies. This could be a correlation here that works. As of now, it's been working for a while. That few assets are getting. It's pretty much money's moving from risk on markets, which is the equities, into the risk off or safe haven as gold, Japanese yen, and sometimes Swiss franc. So again, it depends how the sanctions play out, depends what Russia's doing in Ukraine, depends how the situation escalates or de-escalates there. We'll see how the currencies are responding to it. And let's wrap it up with Bitcoin. And Bitcoin, on the selling of the market, it also sold out. And this was the low of 34,300, and now it's trying to slowly recover, but we are still below 40,000 on Bitcoin. Again, just to put it all together, again, I hope that we hear some better news within the upcoming week, and I will be happy to greet everyone with a happy Sunday. I'm really hoping that it's going to happen, the war will be over. Because nobody wants to see people suffering. It doesn't matter who they are. And again, the world is pushing on sanctions and things against the rulers, against Putin. And as far as the events, we have NFPs on Friday. We have 3 major days of speeches. Tuesday is the Biden speech, very, very important. And Wednesday and Thursday, Chair Powell is speaking from the Congress on monetary policies. And I wish everyone a safe week. Stay safe and healthy, and lots of success in everything that you do. All the best.